We're talking about the Federal Reserve and the big news of the day from the headlines. Minutes from the last Federal Reserve meeting were released today, but many people and investors are still asking the same question that they were before the notes came out. When will America's central bank end or stop or reduce the $85 billion a month asset buying spree? Daniel Wrenches tries to find those answers from Washington.
The Fed's breathtaking injection of cash into the U.S. economy was designed to keep America's commercial banks solvent, promote growth and lower unemployment. The Fed's unconventional stimulus strategy turbocharged global stock markets, which have been gorging on the abundance of cheap investment capital. And economist and former presidential advisor John B. Taylor thinks it's time to wind it down.
My recommendation is to lay out a strategy to get back to normal policy. You could say, if not now, when? It's not going to be easy. That's what we warned about way back when. But that's what this economy really needs. It needs some predictability about policy. It needs to get back to a normal policy. You go around the world and talk to central bankers, they crave the day that they could be back to normal kind of policy. They don't like this.
The newly published minutes of the latest meeting of the Federal Open Market Committee, the central bank gurus who will decide when it's time to get back to normal, shows that they're not going to do anything just yet because they're still unsure of the U.S. economy's underlying strength. The latest growth, jobs and housing data leave some room for doubt. Mohamed El-Erian, chief executive of PIMCO, a fund that manages over $2 trillion in investment assets, says the market expects the Fed to taper off its massive cash flow soon.
We have now priced in as a market a significant tapering, starting as early as September. And that has got an impact. You're seeing the housing market weaken. House builders have gotten hit really hard on the equity market, and you're seeing the effect of that. Now, the Fed is trying to play defense.
Expectations were triggered by comments made by Fed Chairman Ben Bernanke in May, indicating a gradual tapering might come quite soon if the U.S. economy improves. But it's clear that members of the committee are cautious about prejudging economic performance, fearing further impacts on market expectation, thereby putting upward pressure on borrowing rates even before they act. Daniel Wrenches, CCTV, Washington.